Thanks a lot. Welcome everybody, welcome to my webinar. Broadcasting live from Mexico City. This is me, myself, Alberto Alvarado. This is my YouTube free channel. In any case you haven't subscribed, go there and do it if you feel so inclined. In the search box you type iiivb Strain Room channel, this shows up, you click subscribe. Today is Monday, February 20th, 2017. Oh my god, we're just about to close the second month of the year. Can you believe that? I can still smell the New Year's dinner. I just can't believe it. Here my local time is 1 a.m., 11 minutes past the hour, and it's 7 a.m., 12 minutes past the hour, GMT time. So yeah, we're just about in 1 month to go into spring. For the ones that dislike snow and that. Here in Mexico we don't have snow, so I really don't know what to think about it. What I don't like of spring here is that usually it gets hotter and hotter. Thanks to the global warming, whatever the reason global warming is taking place, but it's a fact, it's happening and it's really hot. So, well, today is Monday and I am lazy. And actually I was commenting out of the record to Katarina that I have more than 24 hours with no sleep. And I need to keep another 24 hours awake. So yeah, in any case that you suddenly feel or think that I am like drifting in what I say, be patient because yeah, we just had proof, isn't it, Katarina, that yeah, I am really tired. I tend to confuse things when I am tired. So, well, today is going to be a slow-paced day as every, wait me a second, please. As every Monday, I'm just going to review quickly some stuff that happened. Well, first of all, watch my trader contest performance. I am close to the 40,000. I am in this position, but the important thing is that yeah, on Friday I was commenting that if the price of one of my two trades that I opened, by the way, let me have another screenshot that is missing. Wait me a second, but well, I was commenting last Friday that I was in risk of having a margin call. In any case, my trades didn't get very profitable before the weekend shortage of leverage. And allow me a second, please, because I simply cannot multitask when I have this kind of hours without sleep. So just a second. So basically I had two trades open on Friday. I commented them live here. And the result of those trades were correct. That was correct, both of them. So well, I will close this window. And well, just a reminder, I have this competition completely lost so far. So my pure objective now is to put back my account into break even. So this doesn't count badly in my overall performance. And I cannot find the other. Okay, here it is. So I opened two trades on Friday. These are the ones. one Kiwi short, and one Mexican dollar Mexican peso long. As you can see here, this long I've held it for quite few hours. If you don't remember, I just said that in any case the price really got to this place, it would have triggered a stop loss in my account, a margin call in my account. That didn't happen. Actually, it continued going up. And some hours before the leverage shortage, I decided to close it. But before closing that, my short in Kiwi, you can see it was a very good trade immediately the moment I shorted it. It was never in a loss. So when I started seeing some hesitation, I closed it with 38 pip of profit, the short, just to leave, trying to foresee the shortage hour of the leverage. I said, okay, it's easier to have just one trade, maybe to be able to avoid the margin call. But just some minutes before having the margin reduction, I realized that this trade could have had the strong possibilities of having a margin call, because if I hadn't closed this trade here, after the shortage of leverage, I would have been in 180% of leverage of a margin. So yeah, this small dip would have triggered a margin call. So what I did, I closed the trade, this trade here, and I opened another trade. Let me see. So well, this was closed with 1,254 Mexican pips. And I decided to open a way smaller trade, 1.3 million, to leave it during the weekend, because I considered that we could have chances of having a gap. So yeah, I left this open, but with a complete safety that my trade was not going to be closed by margin call during Friday. And actually the trade opened in a gap against me, very small one. I decided to open another 4 trades. These are the ones. I'm not going to review them in depth, because well, this euro pound, you remember 2 weeks ago that I had my first margin call on a weekend, that I simply thought that leverage reduction happened at the closing hours of Friday, thing that it didn't happen. And I remember pretty well this euro pound trade. You know what? I'm going to show you what I mean with that. Because yeah, it was very frustrating to me to see that trade was closed by margin call, and after that trade would have become really nice. This is it. I remember closing, I believe that I shorted here, I believe. As you can see, it was the first week of February. This is it. Yeah, it was pretty much here. So we had weekends, and I had a margin call. I was betting to the downside, and exactly my take profit was here. And just look what it did after some days. It would have been a 120 pip trade. In an equivalent of pound, it would have been like 270 pip in euro dollar value. So yeah, it was very frustrating, but well, I am now again short. Sorry, I am now long in euro pound, because what I think I found in the analysis that I do every weekend is that this double bottom is working fine. I like the shape, the price action, the structure of the price behavior. So yeah, and my stop loss is here, as you can see, and my take profit is just below this upper line of this double bottom. The exact point where I have my margin call because of the leverage reduction is now where I have my take profit target in an inverse position. So, well, the Mexican peso is completely explained. The New Zealand dollar, you know what I think about it. Just quickly, after having 2 weeks ago, during 2 weeks, a breakout of a weekly trend line in Kiwi, I was betting for the to the upside. Then we had very bearish comments by the Royal Bank of New Zealand, causing the sell-off of that. We explained some interesting facts of the Kiwi on Friday. Let me just have a quick snapshot here of that. I was commenting that this spike, this was Miss Yellen words pushing the Kiwi lower. This was the latest number in the United States that was very good, and the market in the Kiwi case started moving up above the 72, close to the 72.50. And I was explaining that this is the typical, at least explanation that I gave to this to this happen. Why this happened is because a lot of institutional investors are trying to get rid of a lot of trades in a better position because they were maybe expecting that at some point the investments expected from the outside due to a lot of millionaires moving to New Zealand could have an inflationary push in the New Zealand economy. Actually, after, I believe in Friday, after the New York closing, I received the news, or it was on Saturday, I don't know, that yeah, actually that happened. The foreign investing in New Zealand slowed down overall. So it was not only the new inhabitants of New Zealand, millionaires, maybe not putting enough money betting for the New Zealand economy, but maybe leaving the investments inside their countries of origin. But besides that, the overall inflows of the outside into New Zealand reduced the most, I don't know in how many years or something. So yeah, this is this is why you see this huge, well, this very high volume histogram. If you track it, you didn't have that much more volume, but up to here. So yeah, we need to remember that here it crossed a weekly trend line. So now it is mostly undeniable, at least for me, that yeah, this is the typical reaction when you have actually the market grabbing misfooted the institutional investors. Not meaning that all their positions were closed here, because that is not the case. But of course, triggering a lot of stop losses at this zone, creating the false illusion of a very good-looking breakout. It almost got to the 2250. It made a no-brainer just to maybe buy here. Thing that happened because here it crossed that weekly trend line. We had this huge spike of volume then, but a lot of people believe that the market was heading to move up after retesting this trend line and showing this volume, but it just did the opposite. So this was in the forex markets. It's not. Yes, we do have what is called manipulation of prices, etc. But this is not exactly that. This is only using one of the weapons of the arsenal in the big institutional banks and hedge funds. This is the kind of stuff they do. They are prepared, of course, because imagine that at this point they wanted to get rid of a lot of big positions in Kiwi. They would have dumped the market to the 0.7 and they losing even more. So it's way cheaper to create this move to the upside, and then here start triggering stop losses, start providing the demand here, and then start providing the demand here, and then after this artificial and weak-handed price action demonstrated that it couldn't keep up with this steam, because this steam was, let's say, artificial, the market then started doing what it was supposed to do. It moved to the downside. I still expect this to hit at 71.35, and by the way, my objective in the Mexican peso is the 20.75, the same price levels. These are way more complicated to explain now. These pound New Zealand, pounds, Swiss franc, and Australian dollar, New Zealand dollar. I am sure in this. I don't know if these trades are going to be correct, but I really wanted to diversify my lots and not just betting in one position. Because in let's say I had the option at the opening of Asian session to open more lots on the long side on USDMXN. But I said, you know what? In any case, it's all or nothing, and I am really into putting the account back to the break-even area. So I really need to play my pieces in the right timing and at the right moment and in the right size. So yeah, I was tracking some of the price action, and what surprised me was this, because actually I was commenting to Sharp Sense on Friday that I was super bearish on New Zealand dollar. So I want to show you how this Australian, this Aussie Kiwi looks like. I was surprised here because I really would have expected to have this moving to the upside, betting that in taking as reference the New Zealand, the Kiwi drop, maybe the drop of the Kiwi should be bigger than any kind of drop in the Australian dollar. But my surprise was that during my weekend analysis and after the opening, I really was surprised to see, I at that moment I didn't have notion of this double top happening. But during the weekend I was analyzing the price action, etc., and I said, this is heading south, in my opinion. So I was working in my mind a trade and say, okay, I will put a stop loss just here, and my take profit target was kind of 105.60. But I was wondering why the Australian dollar could be weaker than the New Zealand dollar. And maybe it's precisely, even though maybe the inflows of expected inflows by the millionaires moving to New Zealand were not enough to create a hawkish speech by the Bank of New Zealand. Actually, that is going to be the investments that these guys will do, even though they are not that big. Maybe is the aspect that could allow the New Zealand economy to outperform a little bit the Australian one, those investments. So yeah, maybe they weren't that high, but in comparison to the deterioration of the Australian dollar, maybe it would have a good impact. Because I was surprised. I was like, okay, a no-brainer Monday, long Australian dollar versus New Zealand. I was thinking that way. But then I was making the analysis, and then when I opened the platform, I just saw this in the 4-hour chart, this double top. So that was my confirmation. I said, okay, let's do it. And I open it, of course, the stop loss no-brainer here, and the take profit target was here, the 106. That is the psychological level. So yeah, this is maybe the most interesting thing, because I was not really expecting this kind of trade happening. But well, as you can see, I shorted here, I am here, so the stop loss is here. It's not a very ambitious trade, but well, it's a very interesting one, because I really didn't expect it. And this I commend this because it's important that we always have in mind, never get married to a position, to an insight. For example, I was convinced that if I had to open a trade in Aussie Kiwi, it should be a long trade. But after my analysis, I convinced myself otherwise. And that is the open-minded approach that you need to keep in trading. Focusing on the facts and not on your opinion. because here the forex markets is not a contest of popularity of who has the best opinion. It's who makes money out of even bad opinions or incorrect opinions. That's what forex markets are about. So yeah, this is one of the examples. I was really strange finding myself maybe figuring out short trade here and just opening the day, this double top showed up. So it was like, oh my god, this is maybe, I mean, if you're trying to figuring out to short something and then this shows up, it's like the confirmation that maybe you were looking for. Regardless if at the end it's correct or incorrect, these are the trading setups that you should be looking for. Trying to anticipate a trade and just use these trade edges, these chart patterns or technical analysis in general as confirmation. I didn't short this, and I never short this just because double top shows up. I short because I have an idea of shorting and then having this confirmation. Okay, this is the logic, the steps in the logic that we need to follow when we trade. So well, these are my positions. I believe that the pound Swiss franc and pound New Zealand dollar, it's not could be very complex to explain. This short pound Kiwi should explain that in comparison the New Zealand dollar should revalue on the pound. Even though this is more a correlation-based trade, it would be it could make sense, you know, because yeah, we're just heading maybe in March, the formal Article 50 triggering. So even though the world economy made up its mind to that happening, etc. But yeah, maybe even though the dovishness of the Bank of New Zealand, again, maybe those millionaire inflows, even if they were not as high as I could have expected, that would work and would help to, for example, in any case this trade is correct, to support a better behavior by the Kiwi than the pound. That is why I'm shorting this. So well, this one is much more complex to explain, so I will just skip it. So well, these are the 5 trades that I open. So hopefully now my account, let me show you. It's not precisely good looking. Let me take a here it is. So as you can see, I am using 98% of leverage. This is what really was important for me, because that is why I decided to diversify in more trades. Because in any case, for example, if as you can see now, all the trades are in red. Not big deal. These ones, I mean, the Euro Pound is 5 pip. The GBP New Zealand dollar usually moves a lot is 14 pip. The Aussie New Zealand is 16 pip. That it's well, this usually moves more. The pound Swiss is negative 16. So these are like normal, right? And this Mexican peso just retraced a little bit, and I expect this to continue going upwards. So yeah, I'm in an overall loss of 4,000 in a 38 equity, so that means that my balance is 42. So yeah, I'm in the path of recovery. I made it to the 42, coming back from the 15 area. So that it was a good Friday. So I don't want to spoil that work just opening 1 trade or 2 trades. I have the confidence that at least half of the trades now are going to be closed in profit. So according to my calculations, my worst case scenario would be closing all the trades at break even. So yeah, that was pretty much my logic. And again, as a reminder, I know that I repeat this very often, but you need to plan and strategy upon your interests, and that will shape the final tactics that you will end up using in your trading behavior. Since my idea is to preserve at least this account at this size no matter what, I have to diversify the maximum. And I need to focus on trades that, at least if they go against me, at least some of them could have slight chances of moving in my favor. So at the end it could be in break even. I'm going to explain that in depth a little bit in some more. This is the just explained the Mexican peso. Now I'm going to explain the Kiwi one. Well, here is where I closed the trade on Friday. Then the market made a bullish gap, closed it, retraced. I still expect, even though we are having in the 4-hour chart this line, I expect this to touch the 71.35. So, well, that's pretty much everything on Kiwi. And this is the Mexican peso trade. This is a retracement. So we have, as you can see, a bearish gap to the downside today. The market recovered, retraced, recovered, retraced, and here is my trade. So yeah, it's not a big deal. Sometimes we need to make this a habit to ourselves. It's very normal that when you're trading over, when you're opening a lot of trades, and you see them all in red, you start getting nervous. But the thing is that you need to have the context, the general idea before being panicking because of all the trades being negative. Because yeah, first of all, the negativeness of these trades are inside the normal. I have a stop loss that are stop losses are completely logical. So yeah, it's everything is between the analysis. So you don't have to panic just because all the trades are red at some point. Overall, because as you can see, a lot of the patterns that I am playing in this case are in the 4-hour chart. So you need to at least leave a 24-hour trade to have a mental snapshot of the performance of that trade. Overall, because we're just about to start the London session, then we have the American one, and then we could talk about the performance of this trade, because this trade could last 3 days, for example. In any case that it is correct, it could last 3 days, or even 5. So, in any case that I have all the trades closed in profit, yeah, they would put me above break even. So that is why I try to select strategic trades, not tactic ones, the ones you go out after 10, 15 pips, no, strategic ones. The ones that are way more difficult to change. And to do that, you go to the 4-hour, to the daily, to the weekly, because it takes much more dynamic to change the direction of something when it was born in the 4-hour. It's active in the 4-hour, on the dailies, etc. Okay. So well, this is how my equity curve looks. Dump here. You can see I was below the 20k zone. Here I avoided making a bigger drawdown, and then I recovered here. So this is how it looks like now. So yeah, I stopped the drawdown. So that it's important, because this is the only thing that could I'm going to tell you something. If at some moment I wanted somebody to manage my money, I don't care about his profitable curve. What you should be caring is about how this guy or this woman handles the losses. The losing streaks is what you really need to focus on. Because yeah, it's even at some point it's even more dangerous to be successful in trading, because you become lazy and you start committing stupid mistakes, etc. But the thing is that in the way you manage when you are more than 80% in a drawdown, the way you manage it how you control your emotions, how you can continue thinking clearly and straight is what it counts. That you don't panic. You will feel panic, but the only aspect, the only thing is that you won't allow that panicking to take control of you. And the only way to know it's when somebody is showing you how he or she solves that drawdown issue. Okay, so yeah, even though I am urged in getting, for example, I committed that in 2 or 3 trades. I didn't take profits at the rational points because I was just trying to push to get in one trade above break even. So, okay, it was a mistake. I did it in demo. I don't do that in live. But you know what? If I am committed into putting this back into break even, I need to start doing it the way I do it in my live accounts. So well, that is why I diversified, and I am, as you can see, and I will show you in some minutes why all the levels are inside the completely acceptable zones. Well, just explain you the Mexican peso trade. That my stop loss is at the same price as Friday, and my take profit 20.75. I just showed you the Kiwi. I just showed you. Let me show you again all, so we don't skip it. And I believe with this, I'm going to close the webinar. Well, here quickly, the Mexican peso, again, stop loss 22. Here it's not visible, but the take profits 20.75 is the same take profit target from the last week. So that's no brainer. This is the one that just explained, the Kiwi one, that I expected to get to the 71.35, but well, just realized that this trade is not open here. I have it open in my live account. So well, but just to let you know, this trade I am still betting to the downside, to the 71.35. That is why you don't see here take profit or stop loss, because in my trading contest just realized that I didn't open this trade. This is the pound New Zealand. My stop loss, we had this rectangle. It's not very high quality, but it's in the 4 hour. That is why I like this rectangle. And as you can see, I am betting to the downside, and my stop loss is just above this line, close to the 175. This is not precisely the best place to put it, because the most likely thing is that if it gets here, it could retrace. But the thing is that I really don't expect this to be touched, but you need to have a seat belt. And in any case, this gets here, for me the complete scenario for this going down will be nullified. So that is why I put this. If in any case the price gets here, if I am taking a nap or whatever, I would rule out shorting this again for some days. Okay, so that is why I put it here. And as you can see, my take profit psychological 1.7 inside this rectangle. So I am not betting, like, I'm not going to commit the same mistakes in the first 2 weeks, that just because I wanted to have in one trade to put the account back into break even and more, not closing them at rational levels. So this, in this case, the pound Kiwi is in a rectangle. So these are very not easy to trade, but when you trade them, it's no brainer. If you short here, at some point here or above, you need to put your take profit, and the best thing is that I have this psychological. So as you can see, this is perfectly valid. The only price that could maybe make it hesitate is the 70.50. But in any case, that if I realize the market stopped here at 70.50 and it's rebounding, it should rebound up to the 71.25, And maybe if I see that, I would just close it. But as you can see, even that scenario happening, I could have a decent profit in this trade. I just explained this one, the short on Aussie Kiwi, the stop loss above this stop, and the take profit just below this line in the psychological level. And the pound Swiss franc, that it's the most complicated to explain, but well, just to let you know how it is. Again, in the 4-hour chart, we have a huge triangle of 81% of quality. This is huge. And look at this. This is it's a complex line of thinking that led me to be convinced to short this. But again, having this retesting a resistance is like a logical thing to do. Okay, it's like, okay, if you're going to short this, you short it here. And in my case that I wanted to short it, well, I just took the chance. I put a stop loss between these two lines, the stop loss at 25.4, and my take profit is just in the psychological 23. The first take profit target should be this zone, the 23.50 or something. Again, if I see the price not getting there but hesitating and maybe getting to the 24 at this, if it moves here at the 24, maybe I would expect to retest the zone more or less and to close it. But I think that this could go directly to the 123 with no hesitation. And that is what I believe. And the Euro pound trade, well, I'll just explain this. It's like trading a rectangle. And my take profit, it's below this line, and the stop loss is above this lowest point. So yeah, it's a no-brainer. So as you can see, even though all these trades are in the 4-hour, and all the chartist patterns that I am considering to put my stop losses and take profits are in the 4 hours, so I shouldn't be surprised that in the first 2, 3, 4 hours the trade is negative. It's completely normal. It would be a real problem if in 18 hours the trades are in the same place or worse. But well, we need to wait and see. But as you can see, I am not expecting having over expectations on some trades. I am taking actually profits at psychological levels, etc. Things that I really don't know if I had done that, if I could have an account already back into break-even area. But the thing is that I had to think this weekend if I really wanted to continue with a competition or just drop it. But you know what? I am tired of dropping the competitions when these demo competitions because that's what I've done. And the last month was a very good one, so I am maybe this could not be a good month, but that doesn't mean that it could not be a break-even month. Why not? It's perfectly normal. Overall, when you're risking this amount of money, overall, me having a first margin call because of a mistake that I made. So yeah, it would be getting back into break-even. This would be, for me, a winning strategy. So well, I believe it's going to be everything for today. The other aspect that I don't know if I commented it. I believe I didn't. We had yen strengthening during the Asian session due to the fact that the bonds and the treasury markets in the United States opened weaker this Monday, so that didn't help, and we just had above than expectations number by the Japanese economy. So that is pushing, at least during the Asian session, push the yen favorably. But again, all these trades are based on a 4-hour chart. So when you do that, imagine that you, for example, that you have how to say it? Sorry, I believe I just gave a wrong explanation. Sorry about this, but well, The exhaustion factor, it's important now. So, well, the thing is that we had a bullish United States dollar versus the Japanese yen, and that is because we just had a weaker than expected number by the Japanese economy. Okay, but well, the thing is that we need to have for tomorrow to consider the treasuries of the United States and the Japanese yen, how they behave during the American and European session, and that's what will shape our trades on Tuesday. The way they settle down, the way they move, etc. So focus on that if you're interested in watching and trying to foresee what you could be interested in opening tomorrow. So let me just quickly check. My trades are a little bit better now. So yeah, I believe that the next checkup that I will do to my trades is going to be at Asian opening. I really don't expect that something important happens today. Today is Monday, so we don't have really something that super important, fundamental in the United States, etc. So I believe it's time to call it a webinar. I am seeing somebody new here. It's Chart65. Welcome. I guess I never saw you here before. Welcome to my webinar. I hope you liked it. Just realized I don't know when you logged in. Sorry. So well, remember that I broadcast from Monday to Friday from 7 to 8 a.m. GMT time. So at the same time, from Monday to Friday, you can find my webinars here live or recorded in YouTube in the Dukascopy channel. So I would like to thank everybody for showing up. I would like to thank Arena, of course, for hosting, recording, and remember that I expect you all tomorrow at the same time, same place. Remember to trade safe, be safe, and bye-bye.